Okay, so we talked about how they're hiring a director of accounting, right? A position. And the person that they're looking at is formerly had a job as a director of marketing. And so we talked about how that was a problem with what? What do you think it's a problem with?
Hiring practices.
Yeah, smart hiring practices. Obviously, she doesn't have the experience in accounting to be hired for that position. The other kind of smart hiring practice issue that we might see is, did they look into why she was laid off or the implications of her being laid off, such as performing a background check? You would expect that to see if she has significant debt that would lead her to be more motivated potentially to commit fraud. This next sentence, one of the changes that BIA instituted at SARI was a streamline of accounting procedures for reimbursement of employee expenses. So let's read more about that. Previously, employees that submitted expense reports for reimbursement for travel expenses had to submit original receipts verifying the expenditures. Does that sound appropriate?
Yes.
Yes. So that sounds good. That sounds good for adequate records, right? Submit an what was that?
Sorry. No, go ahead.
Okay. Submit an expense report detailing the expenditures. Does that sound appropriate for adequate records?
Yes.
Yes. And submit the report to the employee's supervisor for approval. What does that fall under?
Proper approvals.
Proper.
Separating the duties.
Yep. So there's oversight, right? Somebody's checking those expenditures were actually legitimate business expenditures. They're in the department that the employee is in, so you would expect to see that. Since this process required management's time to review each expense report, BIA's new policy was that employees only needed to complete the first two steps, and she would review expense reports. Is there proper approvals there? Possibly.
Yeah.
Possibly, if she's actually reviewing it, if she's actually intimately involved and she knows what the expenditures were. BIA approved all requests submitted to her.
So she blindly just signed.
Yeah, so what does that mean? Are there proper approvals?
No.
No. That's a huge error. That is not correct. That she shouldn't be doing that. If employees see that every single expense that's submitted is getting cleared and reimbursed, what do you think that's going to lead employees to do? Submit additional expenditures. Push the limit to see, oh, well, if I buy this new computer, will it pass? Will she approve it? If I buy my son's textbooks on the company's credit card, will she approve it? What will she approve and reimburse? And right now it's everything. Since BIA's hiring, all travel expenses exceeded the budgeted amount by at least 25%. Danny, yes, thank you for noting that. He said that it happens all the time in the Navy. I'm not even going to get into government accounting and the issues with it, but all travel expenses exceeded the budget amount by at least 25%, but the budget had not been changed, nor had the differences ever been investigated. So what is that violating?
So there aren't any adequate controls.
So,
Comparison and
I mean,
compliance monitoring.
yeah, you probably could argue that it's partially adequate records because there's probably expenditures that are not business expenditures, right?
Right.
But comparison and compliance monitoring is the major one.
Mhm.
Because preparing a budget is great, but if you don't check that budget against the actual results and compare budget to actual and investigate differences, then that means that that budget is worthless. It's not a monitoring control.
Miss Sanchez.
B, assume that the creation of the new office in anywhere was responsible for the increase in travel expenses. This fact that she just assumed something is a problem in and of itself. You can't just assume, you have to look into it. You can have an assumption, but you need to have evidence as to the assumption to back it up. Because sometimes our assumptions are not correct.
That's true.
In this scenario, we addressed everything but limited access. Limited access wasn't addressed. Does this make sense, kind of investigating it or looking at it? Do things like stick out to you that it's obvious that it's not operating as it should? Good, Yadi, thank you.
So are these part of the internal audit that you do as an accountant?
So internal audit does tests. They implement internal controls, but they also test internal controls. External auditors test internal controls. They can be hired as consultants to implement them. But we would be looking at this, yes.
Mhm.
And if that policy had changed, that would be an issue.
Yeah, she just assumed it's okay.
She doesn't even care.
Yeah.
That's all. Okay, we're gonna leave this for now. Let's see. And we're gonna go into the bank reconciliation. The fun stuff. We're still technically talking about an internal control when we're talking about a bank reconciliation. It's a type of internal control that we do specifically for our cash accounts. Oops, sorry. So when we're talking about a bank account, there's a number of reasons why we use a bank account. Protects our cash, right? Having cash not on hand is protecting our cash because we're putting that cash into somebody else's hands and they're taking proper control of it, and they have protections related to handling our cash so that people can't misappropriate it. Here are the controls that we see related to bank accounts. Signature card. So when you set up a bank account, the signature card tells us who the authorized signers are. How much can these people authorize as a transfer or a check? After a certain point, let's say $10,000, checks written over $10,000, we need X number of signatures, so more than one signature. That would be telling us who are authorized to write checks above $10,000, who has to have a second approval, second signature on it. It's helping to prevent against forgery. For the bank statement, what's included on a bank statement? How many have actually looked at a bank statement? Not online banking activity, bank statement. I know a few of you have looked at a bank statement.
Every day for 3 years. 4
Thank
years,
you.
sorry.
Not the online banking activity, you've looked at a bank statement.
No, well,
Yeah.
I was a banker, so I
Okay.
had to look at statements every single day.
Okay.
But I did look at my own too.
So it's
Okay, so
everyday
what's on a bank
activity,
statement?
credits and debits, everyday activity, check writing.
So beginning balance,
Yeah.
ending balance of the account. So the beginning balance at the beginning of the month, the ending balance at the end of the month after all the
Deposits.
transactions. Yep,
Deposits
all of those deposits.
and subtractions.
Yep, and withdrawals, exactly.
Uh-huh.
So yes,
Credit
technically
and
those
debit.
debits and credits. What's going into and out of the account, all the changes.
If the bank charge any fee for
Yep.
as well. Uh-huh.
Bank fees,
7 and 2.
new check fees. So if you have checks,
So, okay.
every detail that's happening with that bank account is coming through that bank statement. And it's showing us a running total by day, right? What day the check's cleared, the amount the check's cleared for, etc. The deposit amounts, everything. How often do banks send you your bank statements?
Once a month or
monthly.
quarterly, depending on what you sign up for.
For the most part, once a
It's
month. We're
monthly.
gonna go with once a month. For main or checking accounts, it's always gonna be once a month. What's the deposit ticket?
It's a receipt of a deposit you've made.
Thank you. So it's listing all the checks, the amount of cash, etc., that was made on a specific date. If I'm a business and I'm sending it with an armored truck, I'm going to keep a carbon copy of it, and I'm going to send the original deposit slip or deposit ticket with my deposit to the bank. So then when my bank statement comes through, I can check to see that that deposit ticket that I show as my deposit is what's clearing the bank. And if it doesn't, then I can figure out what's the difference is, discrepancy is. So it's evidence of that deposit. For the check, how is that a control device? What is a check? How many parties are there to the check?
2.
Technically, the answer is 3.
Yeah, the bank and the person you write the check to and you.
Okay, so bank the check is written off of. The payee who we're writing the check to. And the maker of the check. It's a control device because the maker has that record of how much they're writing the check to, but it has to be deposited by the payee before it clears our bank, and it reduces our bank account. And that it has to be approved by that bank that's it's written off of, that there's actually cash in that account. So as soon as you write a check and you send it to payee, you technically should reduce your cash balance by that amount because it's no longer your cash as soon as you write that check. Because that payee can go to the bank at any point and make the deposit. And you have to have enough cash in that account to clear that value. bank reconciliation is what we're going to talk about next. Since you receive those bank statements monthly, the bank reconciliation should be prepared monthly for every single one of your cash accounts that you have. Every single bank account that you have. You're going to do an individual bank reconciliation. So the bank reconciliation is updating our cash records. We have two cash records, the bank record of our cash and the book record of our cash. Those two records typically do not show the same ending balance of cash. So in order to determine what our actual cash balance is, how much cash we actually have available at the end of the period, we need to reconcile those two balances of cash. Because we have some timing differences between when we record it in our books and when it's recorded at the bank, and vice versa. Some transactions are recorded just at the bank, and at period end during our bank reconciliation, we need to record them in our books. Other transactions happen on our book side, but they're not reflected yet in the bank statement balance. So we need to adjust and reconcile those items. So the bank reconciliation is only showing transactions that have occurred on one side but aren't reflected on the other side. And basically we're reconciling to the actual cash balance, how much actual cash the company has at period end. I'm going to give you a second to write that down.
Does that say G2 where it says G2/book?
Oh, I'm sorry. GL, General Ledger.
Okay. Thank you.
Okay, you could raise your hand in Zoom, but how many of you have balanced a checkbook before? There's got to be somebody. I usually have a few. Or you learn
Not
how to balance.
anymore. Not anymore.
Not anymore, but you learned how to balance a checkbook
yeah, I
at some
used to
point in
do
your
it.
life.
Yeah, when we were writing more checks and doing everything on paper, yes, but
Okay.
Yeah.
Because if you understand how to balance a checkbook, dude, I still have to write checks for some things. So checks are a thing still.
yeah, no,
You guys need to know how to write a check.
yeah.
But yes, it doesn't happen as much. But
Yeah, I still don't like using Venmo. I would rather write a check. So that tells you how old I am.
I don't like third party things, so
Yeah.
I get that. Okay. If you know how to balance a checkbook, bank reconciliations are extremely easy to you. That's why I bring that up. So back in the day, I actually learned how to balance a checkbook in high school. I don't think they still teach that. But it is useful. But if you know how to balance a checkbook, bank reconciliation is exactly the same thing. That's all. So if you don't, and you never have balanced a checkbook, this may seem extremely foreign to you, but I can guarantee you bank reconciliations will not be going away anytime in the near future, because it is a huge internal control that companies have. So when we're preparing a bank reconciliation, we'll have adjustments on two sides, the bank side and then the book side. And the adjustments that are made on each side are very specific. On the bank side, we have 3. So the first one are deposits in transit.
Transits. Deposit in transit.
With deposits in transit, we've made the deposit, we've recorded the deposit on our book side, we've sent the deposit to the bank, and it hasn't cleared the bank statement as of period end or month end. So you've made the deposit, you've sent it to the bank, either with the armored truck or you've gone into the bank, but there's a hold on the deposit or it hasn't cleared at month end. It's still your cash. You still had that deposit. So your book side has reflected that increase in cash, but on your bank side, it won't show that increase in cash until the next day, which is the following month. So it won't clear your bank statement until the next period. So you need to add back deposits in transit on the bank side. These are typically the last few deposits of the month. They usually happen on the last few days of month end. DIT. So they happen at month end and they're not going to clear until the next month. And that's why you need to reconcile it for this month, because it is technically cash at the end of this month. The second adjustment is for outstanding checks. We've written checks to our vendors or to our employees. We may have written these checks months ago. It could be during the current month. We gave them to those individuals, but they haven't deposited the check yet. So as soon as we write those checks, we reduce our book balance for cash. But until that payee goes to the bank and makes the deposit, our bank side will not reflect that check that was written. So an outstanding check is a check that was written but not cleared because the payee hasn't deposited it yet. Are we going to add or subtract outstanding checks from the bank side?
Subtract.
Subtract. Our cash balance is too high. The last item on the bank side are bank errors. So the bank made an error, and bank errors can either be added or subtracted depending on what the error is. So if the bank accidentally deposited money into your account, your bank balance would be higher than you actually have as your own balance, your own cash. So you would need to subtract for that deposit that was not yours. If the bank withdrew money from your account on accident, your bank balance would be lower than it actually is, and you need to add back for that bank error. Happens more often than people might think, yes. And it can happen a lot, especially if you're using your ATM. Make sure you check the receipts for those transactions. My sister went for a $10 lunch and the vendor accidentally pushed an extra 2 zeros and withdrew $1,000 from her account. And it took a while to get back that difference between that $10 lunch and the $1,000. So errors on the bank side do happen, and you should always check that bank statement to make sure that what's coming into and out of your account is actually your cash.
So one of the things I really find useful now that didn't happen is the email. Every time I swipe a card, credit card or debit card, I get an email.
As a
saying,
notification,
yeah, and I love those. Then I don't have to really
review
check it very regularly. Yeah.
Oh yeah. I like anything that makes it easier on me.
Yeah.
Okay, so I always recommend starting on the bank side because there are only 3 adjustment potentials. On the book side, there are quite a few more. The first one are bank collections. So instead of having your customers send you checks directly or send payment directly to you, you're using a lockbox system. So they send their payment directly to the bank. The bank processes all of those collections and sends you a summary of who they collected and how much they collected. So on the bank side, they're going to increase the bank balance for these deposits, these collections of cash. But on the book side, we're not going to go through it daily and adjust our accounts, but we're going to wait until the reconciliation and add it back. It's reflected on the bank side, but not on the book side. So on the book side, we need to reflect those deposits that were collected during the month. EFT, so electronic funds transfer. And with electronic funds transfer, you could have collections or you could have deposits. I'm sorry, collections or payments. Electronic funds transfers are just transfers between banks. So setting up that auto payment for your cell phone bill or SDG&E, that would be an example of an electronic funds transfer. So you're just, instead of writing checks for those payments, you're just sending it electronically. And you can either be collecting cash from your customers electronically. And in that case, when you have an electronic funds collection, you're receiving cash. It's reflected on your bank statement, but not on your book side. So you need to add back for those collections. For payments, you're paying cash and it's reducing your bank balance. So you need to reduce the book side as well. Service charges. They don't send you a bill for a service charge, but the bank's going to just take the money out of your account. So if you have a $10 fee each month, they're just going to take it directly out of your account. So you're going to reduce your bank balance already, and we need to reduce our book side for that reduction on your bank.
Professor Wade,
Yes.
I'm not quite understanding what you mean by adding and subtracting.
You'll see in a minute. For number 4, some of the bank accounts are going to earn interest. So interest revenue. They're not going to just send you a check for a few pennies. They're going to add it back directly to your bank account. So your bank balance shows a higher balance related to that interest revenue. So we need to add it back on the book side. NSF checks or non-sufficient funds checks. One of your customers wrote you a check. You recorded it as a deposit, increasing your book balance. But when you sent the check to the bank, that check did not have enough cash on it, or the bank account did not have enough cash to clear that check, and it bounced. So the deposit that you showed on your book side isn't reflected on your bank side. Your bank balance would have shown it as bounced. It would have deposited and then reduce it for the NSF check. And you need to reduce the book side because it's not a deposit. You show it as a deposit, but it actually didn't clear. So you need to reduce the book side for that bounce check. Then you're going to request payment from your customer again, not in the form of a check this time. Cost of printed checks is just a fee that the bank might charge you if you need additional checks. And they're going to take it directly out of your bank account, reducing your bank balance. So we need to record that in our book side and reduce the cash balance on the book side. The last adjustment on the book side that you could see are book errors. So bookkeeping errors. Bookkeeping errors could be added or subtracted depending on what the error is. We made this error when we were recording it. So if I recorded a deposit for higher than it actually was, my book side would show a higher cash balance than it should be. So I need to reduce and subtract for that difference between what I recorded initially and what the deposit should actually be. You could have book errors for checks written. You could have book errors for recording expenses. And depending on what the error is, we may add or subtract for that error on the book side. If you opened up your chapter 4 homework, you'll see a couple different bank reconciliations that you have to do. One set of them are easier than the other. We're going to start with a basic one, which is not realistic. This is not how it's listed in reality. And then we're going to do one that's more realistic. So Frank White operates a roller skating center. He has just received the monthly bank statement at November 30th from Citizen National Bank. And the statement shows an ending balance of $570. Listed on the statement are an EFT rent collection of $335, a service charge of $8, 2 NSF checks totaling $120, $10 charge for printed checks. In reviewing his cash records, White identifies outstanding checks totaling $601. and a November 30th deposit in transit of $1,765. During November, he recorded a $270 check for the salary of a part-time employee as 27. White's cash account shows a November 30th cash balance of $1,780. So right here you have one record of cash showing a balance of $570 and another record of cash showing $1,780. So clearly there's a difference going on. And neither of these are the actual cash balances. That's why we have to reconcile each month.
Professor Wade, can I see the book side number 4 and 5, please?
Yes.
Thank you.
Can you see it?
Yes, thank you. Thank you.
You're welcome. Okay, so on the bank side, we always start with the ending cash balance per the bank statement. So we're going to write Citizen National Bank
So we
balance.
start,
What was that?
I was just gonna, what we start with again?
The bank balance, the ending balance per the bank.
Okay.
So the balance as of the end of November, because we're preparing a bank reconciliation as of November 30th. We're trying to figure out and determine the actual bank balance that they have on November 30th. How much actual cash is available on November 30th, sorry. Per the bank, after all the transactions that were recorded in November, the bank is showing a balance of $570. So from the beginning balance at the beginning of November, all the deposits made, all of the withdrawals made in November, this is what we're ending the month with per the bank. We always include our additions first. So on the bank side, we could have potentially two additions: deposits in transit and bank errors that need to be added back. So they had a November 30th deposit of $1,765. So I went over to the book records of cash, and the books reflect a deposit of $1,765 that's shown on the book side, but hasn't cleared the bank statement yet. So we need to add back for that $1,765. As we did have that cash, we made the deposit, it just hasn't cleared the bank yet. It'll clear during the next month. Do we have a bank error that we need to correct for and add back for? Did the bank make an error that we need to add? No, correct. Warren is correct. The book keeping side is where the error is. So we can add up these and we're going to create a little subtotal. The beginning balance the ending balance per the bank plus the deposits in transit gives us a subtotal of 2,000. $335. On the bank side, what is there left to subtract? So after we've taken account of our additions, what we need to add back to the bank side because it's reflected on the book side, but not the bank side.
Outstanding checks.
Outstanding checks. So outstanding checks are checks written. We've reduced our cash balance on the book side. But they haven't cleared yet. So we need to subtract for those outstanding checks because we don't actually have that cash available once we write those checks. Usually they're listed out for you and you have to figure it out, but they gave us just a total amount, 601 in outstanding checks were written and still outstanding at the end of November. Since we know they don't have any bank errors, we know that that's all we have to reconcile on the bank side to calculate our adjusted bank balance as of November 30th. So this is going to tell us how much actual cash is available on November 30th for this account. So 2,335 minus 601 gives us an ending cash balance
1734.
of 1,734, correct. Does the bank side make sense? Kind of, sort of.
One more. Most likely, will this be the way the bank side is written? Does that make
Yes,
sense?
yes, you may just have more under outstanding checks listing out the check number and you'll see it later. We'll go over
Okay.
another example. But yeah, that's pretty much what it looks like. On the book side, you start with something similar. Balance per book. As of November 30th, so this is the ending balance, which is the unadjusted balance from my bookkeeping records, my GL. So we're going to go over here. And the only information for the book side that's coming from the book information is the balance per the book. 1,780. Is currently what my balance is showing. So this is a reflection of all of the deposits that we've recorded in our book side, all of the withdrawals we've shown on our book side throughout the month. On the book side, now we're going to do our additions. And all of the reconciling items come from the bank side because they happened at the bank, but we haven't adjusted the books yet. Is there anything that we need to add?
The
The service,
electric
the service charge $8.
Not yet.
EFT, the rent.
Yeah, the EFT rent collection, correct.
Oh, yes, yes.
So the EFT rent collection, and the EFT rent collection was collected by the bank for $335,
Uh-huh.
and we need to add that to our cash balance per our books. Do we have any other adjustments that we need to add?
No, I don't see any other.
We don't have any bank collections. We don't have any errors that need to be added back. So we're going to subtotal here again. And we're going to add these two amounts together to get a subtotal of
115.
So we know that we started with a higher amount than what we need to end up with. So we know that we're going to have less additions here than withdrawals that we need to account for. Because our balance per the book is already higher than what our actual cash balance needs to end up at, $1,734. For the subtractions, we're going to have several of them. So service charge is a subtraction. And I'm going to use the inner column here. I'm going to just add them all up and then subtract them from the total over here. 2 NSF checks. So 2 customers wrote you checks that bounced totaling 120. NSF checks, 120. A charge for printed checks. So printed checks, which are sometimes just lumped together with the service charge. And then in reviewing his cash records, White identifies outstanding checks totaling, during November, he recorded a $270 check. So this is the actual check value that cleared of a part-time employee as $27. So right now, when they recorded it, they debited salary expense, credited cash for $27, but the actual check value was for $270. So they under-expensed that account and they under-reduced cash by the difference. So you're going to subtract the 270, which is your actual check value. And you're going to subtract out what it was recorded at, 27, to calculate the difference of 243. Because you already have 27 recorded as a reduction to cash. So if you recorded an additional 270, it would be too high of a reduction of cash. So you only need the difference of 243 to reduce cash. And this is to correct the error. Your cash balance is reflecting as higher than it actually is. So I'm going to subtotal it here and calculate that difference that I'm subtracting. So you're going to add up this column here. Add up the 4 amounts that you're going to subtract.
$381.
81. Adjusted book balance.
Just stay safe.
So 2,115 minus 381 gives you an adjusted book balance of
1734.
1,734. So I know that my reconciliation is correct because I've calculated the actual cash available at period end. These two amounts should always match after you reconcile those items.
Professor Wade, so how do we how do we know there's an error again?
Over here, they told you that he recorded the check that was a $270 check
Uh-huh.
as only $27. So he forgot to include a 0 on it.
Okay.
And when they wrote out the check, it is actually for $270 because that's what you're going to see is clearing the bank statement.
Okay.
And that's how you know it was an error.
Thank you.
They always have to give you some information.
Okay.
Okay. We're going to take a break here. So what we're going to look at is they gave us bank account information, so the bank statement. And we're preparing a bank reconciliation for September 30th. The opening paragraph has information that you need for reconciling items. Down below, they gave you a T account for cash. So they gave you the beginning cash balance, so the 9/1 balance of cash. They gave you the deposits, the cash receipts. So the debits to cash that they've made throughout September. And they gave you the withdrawals or the credits to cash payments that have been recorded in the cash statement. So you have to first figure out the 9/30 ending balance of cash, which is what your starting point for the book side is. In the cash records, they give us the records of deposits made and the records of withdrawals that have been made in the cash records. And what you're going to do is you're going to go through each of the items that are listed in your bank statement and compare it to each of the items that are listed in your GL side, your book. And any items that are recorded in both sides, you're going to cross out because you don't need to reconcile them. They're recorded in both the bank record of cash and the book record of cash. So, for instance, in your book record of cash, you have $350 of a deposit that was made on September 1st, and you see it clear the next day in the bank statement, so we can cross it out. So deposits are up here, these first two columns in the bank, and the deposits are the first two columns in the book record of cash. down below. You're going to do the same thing with the withdrawals. So check 607 was the first check written during the month of September for $450, and you see it clear on the 5th of September. So we have it recorded on both sides. We don't need to reconcile that. So you go through, and any item that's on one side but not the other, circle it or highlight it, because we're going to use that in our bank reconciliation more than likely. Before you prepare your bank reconciliation, you have to read this opening paragraph, because some of the information that you may have circled could be eliminated because of this paragraph above. I'm going to give you about 20 minutes or so to go through this. First things first is I'm going to read the opening paragraph. So the bank reconciliation made by Hilton Inc. on August 31st, 2020 showed a deposit in transit of $570 and 2 outstanding checks. Check number 597 for $260 and check number 606 for $180. So deposits in transit from last month should clear what month? So you made a deposit at the end of last month, and you would expect a deposit in transit to clear when? The first few days of the following month. So we're in September. Did that 570 deposit in transit clear in September?
Yes.
Yes. So that 570 is reflected in the books last month. So it's reflected in our beginning cash balance down here. And it's now reflected in the bank. So it's not a reconciling item that we need. So that's taken care of.
Professor, wait, could you repeat that? Because I was kind of lost.
So last month, you made a deposit at the end of the month.
Uh-huh.
You sent it to the bank. You recorded it in your GL account last month.
Mhm.
So your cash balance last month was higher. And so in your bank reconciliation, you had to add a deposit in transit to make it the same. You're
Okay.
just waiting for it to clear the bank statement, and then it's no longer a deposit in transit. So it's usually a very quickly lived reconciling item. Now it's reflected in the beginning cash balance here and the bank statement balance reflects it. So you're good. It's not going to be shown down below as a cash receipt in September because it was a cash receipt in August. So in the August information here, you would see it listed.
Thank you.
You're welcome. We showed 2 outstanding checks, 597 for 260 and number 606 for 180. What we're looking for those outstanding checks is, did they actually clear? So you go to the bank statement and you look for those check numbers. 597 did not clear. Because
No,
if
it's not in the screen.
it cleared,
606.
it would be the first check that's written here.
Yeah.
So this is still considered an outstanding check.
Mm-hmm.
Because it was written in a previous period, but it didn't clear yet still. 606 did clear. They wrote it last month. It cleared at the beginning of this month. So we can remove it from our records. The cash receipts in the journal, the cash disbursements in the journal, and the cash accounts are shown below. And we'll read the rest of this paragraph as we go along. For the deposits, you were comparing the deposits per the bank to the deposits per the book. So on September 8th, deposit for $296 was sent to the bank and it cleared on September 9th. So we know that it's recorded on both sides. We're eliminating that item. Deposit on the 12th for $580, cleared on the 15th for $580.
I'm not understanding why it's being cleared.
Because you made the deposit, you sent it to the bank, and the bank processed the deposit within that month period, so it was cleared. If you send in checks, sometimes there's a hold on the checks. Sometimes there's a delay in days when it's processed, and it could just be because you made the deposit on the last day on a Friday or Saturday, and it won't clear until Monday. For the 16th for 204, you made the deposit in your cash records and it cleared on the 17th. 24th.
And that one day after, right? So it was
Yeah.
clear on the 17th. Okay.
Yeah, and that's common to see it as a different day that it clears on. On the 24th, you made a deposit for $335 and it cleared on the 25th. Notice that I skipped something here, right? It wasn't recorded in our book records. It was a collection by the bank, so we're gonna have to reconcile that item.
Mm-hmm.
I'll circle it. On September 29th, 256, you made a deposit and it cleared on the last day. It's the last deposit that cleared. So what does that mean for the September 30th deposit? It didn't clear, and it's going to be a reconciling item. It's reflected on the book side, but not on the bank side. You're going to do the same exact thing with the withdrawals. So from September 1st until September 30th, you wrote checks from 607 to 616. Those are the check numbers that you wrote. Not all of them will have been cashed by the payee, so some of them will be considered outstanding checks. So 608 for $325 cleared. 609 for $192 cleared.
Clear.
610 for $285 cleared for $258.
But it's a difference because in one is 285 and the other 258.
Yep, so this is going to be an error
Mm-hmm.
that we're going to have to correct. And up here in reviewing checks returned by the bank, the bookkeeper discovered that check 610 written for $258 for repairs expense was recorded in the journal for $285. So they made a bookkeeping error. And we're going to have to correct it.
Is 258, right? The correct one.
The correct one is what cleared the bank, which is the 258.
Okay.
For check 611 for 410, it cleared. 612 for 242 cleared. Notice that 613 did not clear, so we're just gonna highlight it.
Mm-hmm.
The payee didn't deposit it. Check 614 cleared. 153. Check 615 and check 16 did not clear.
Did not clear. So those consider transit, right?
These are checks that are written, so they're going to be outstanding checks.
Oh, outstanding, not transit.
And then notice that we have a service charge of 15 and a non-sufficient funds check of 335. So we have enough information to prepare our bank reconciliation at this point, at least the bank side. On the bank side, we start with our balance per the bank as of 9/30, which is the 7501, right, from the bank statement.
Mhm.
And on the bank side, we're going to add deposits in transit,
I'm
right?
confused with that, Professor Wade, with the checks, deposit in transit and outstanding checks.
Deposits in transit are deposits that you made in your book records.
Mm-hmm.
You sent them to the bank, but it hasn't cleared your bank statement yet. So
Okay.
it's usually deposits that you make at the end of the month. So notice it's the last day of the month and there's a hold on it, or it doesn't get processed until the next day, which is the next month. So you won't see it reflected as a deposit in your bank statement until next month. But since you sent the deposit to the bank during the current month, it's considered cash in this month and you need to add it back to your bank balance.
Mm-hmm.
So it's an amount that you have deposited, it just hasn't been reflected in your balance for the bank. So it's check 430, or I'm sorry,
30,
$430 is the amount.
yes.
The last deposit made this period.
Okay.
Deposits in transit will always be the last deposit or the last few deposits that are made,
Okay.
always. And we're going to subtotal here because we don't have a bank error. We're going to add up these amounts to get a subtotal of 7,931. We're then going to subtract the outstanding checks. So checks that have been written by the company at some point, but the payee has not deposited yet. So you never see them come through the bank statement yet. We're going to start with the oldest one so we don't forget it. Check number
597.
597 for $260. That's our first reconciling item. Then we're going to go down the list to all the ones that we circled. Sorry, down here. 610.
That's 613, right? Oh, did-
Yes, 613. Sorry, I was looking at the circles. 610 is the error. 613 is an outstanding check.
or 214.
Or 214. Check 615 for 357. And then check 616
For 162.
for 162. Yep. So the outstanding checks come from our book records. It's what we wrote during, it's what we wrote, but we haven't cleared yet. We're going to add up these outstanding checks and they total $993. So anything you circled on the book side as a withdrawal on the book side is an outstanding check, aside from the error. Anything that you circle on the book side that's a deposit is a deposit in transit.
Professor, and why we're not including the check CO 606 for 180?
Because it cleared. It was the
It's
first
a
check that
check.
cleared.
Okay, okay. Yes, it's in the bank statement, the first one. Okay.
Yep, it cleared.
Even if it says it's to understanding, we need to check first in the bank statement it was clear before to make the adjustment, right?
Correct.
Okay.
So when I take 7,931 minus 993, what's my adjusted cash balance?
6,938.
6,938. So that's our true cash balance. That's how much cash is available at the end of the period. It's also what my adjusted cash balance for the books should equal at the end of this. On the book side, when you took 6,980 plus the cash receipts of 2,871 minus the cash payments of 2,790, what did you calculate as your
7,061.
7,061?
Mhm.
So that's my 930 balance per the books. On the book side, do we have anything to add?
The
The
EFT.
EFT rent collection, the $20 interest.
EFT note collection of how much?
$200.
$200. And am I done on the addition side? Correct, Warren, we have an error. So we're gonna have a correction of an error that we need to add back. So check 610 was recorded as 285. And check 610 cleared the bank for 258. So the actual check amount.
27.
So we reduced our cash balance by more than we should have. The check was only 258, but we recorded it as 285. So we need to add back that difference. So we're gonna net it. What's the error correction?
$27.
$27. So 227 is going to be added to the beginning balance, the balance per the book. What's my subtotal?
7,280.
7,288.
Yes, sorry.
It's okay. On the book side, we have two items that we need to subtract. So it's what's left over. And if we look down here, we have two withdrawals that we haven't recorded in our book side yet. We have a service charge of $15, and then we have an NSF check, bounce check of $335. So we're going to add up those two amounts and subtract the $350. My math is correct. And the last thing that we're calculating is the adjusted book balance as of 9/30. And Warren, yes, 6,938 is correct. And do I know that I have this correct?
Yes, it's the
Yes.
same as the bank balance.
Because it's the same as what your adjusted bank statement balance is. Ta-da, correct. I like things that show you balance, right? You know that you're correct. As long as you didn't put things weird in weird spots to make it work. Now, there is one last step. This is done outside of your system. So everything that's reconciled on the bank side is already recorded in your books. But anything that's recorded in the reconciliation on the book side needs to be journalized and recorded in your accounting records. So anything that is being added to the book side means we're going to be debiting cash. So for that first one, the EFT rent collection, we're going to have 1 debit and 2 credits. And I have to go back up here. The EFT was a collection of $180 note and $20 of interest. So we're going to debit cash, increasing cash for $200 because we're adding cash, right? And we're going to credit notes receivable, reducing notes receivable for the principal portion, the amount that we collected, $180. And then we're going to credit interest revenue, recording the interest earned on that note. And the explanation might just be to record collection of note. For the second, the correction of the error, we look at what the error was. So the error related to repairs expense. So that's what we're going to offset it to. So these are going to be recorded on 9/30. We're going to debit cash again, increasing cash for $27. We're going to credit repairs expense, reducing the repairs expense account for $27 because we overexpensed it initially. So to record correction of error on check 610. For anything that we're subtracting on the book side, we're going to credit cash. For things like service charges, we're going to record it in miscellaneous expense. Very rarely do you record anything in your miscellaneous expense account, but bank service charges are typically recorded there. You're recording the expense, $15, and we're going to credit cash, reducing cash for $15 because the bank took that cash from you. It's no longer yours. To record service charge. For the NSF check, we need to reduce cash, and at the same time, we need to charge back that customer. So we need to record accounts receivable. because now they owe us again. We reduced their accounts receivable when we received their check bounced, now we need to add it back. So we're gonna debit accounts receivable, and the customer was given to us, D. Lewis. And we're gonna increase accounts receivable because he owes us $335 again. And we're gonna reduce cash, crediting cash for $335 because we previously increased cash and it bounced. So it could be just to record NSF check, returned by bank. From that D. Lewis, you're gonna request cash from him as payment or a cashier's check. And it's unlikely that you're gonna extend credit to this individual in the future. It wouldn't be good business practice if they're bouncing checks to you. I know this is an intense one. I know you're gonna see this in your homework, and I wanted you to see it in class before you get to your homework. Do you have any questions on it?
Besides the homework, will you be able to send us a handout to get extra help on it? Or
Another problem? Like more
yeah,
problem?
or will we say this like a similar thing on the homework?
You'll see a similar thing on the homework.
Okay.
Yeah. And if
And
you have
those
questions,
videos help.
email me. Yes, the videos help. I created the videos just for those homework problems.
I was wondering why the 4:30 was important.
The 4:30.
We recorded on September 30th.
Okay, why it was recorded as a deposit in transit?
Yeah.
So you made the deposit on September 30th. You sent the deposit to the bank. You increased your cash balance in your general ledger, but the bank doesn't show any reflection of that 430 as of September 30th. So it is your cash as of September 30th. And just because the bank hasn't reflected that deposit yet doesn't mean it's not your cash. So you need to add it to the bank side. On October 1st, as soon as you get your bank statement, the first line, the first deposit you'll see on October 1st will be that amount.
Okay, got it.
It's a quick kind of timing difference. Okay. Your homework's due for chapter 4 this weekend. We'll start chapter 5 on Monday, so you'll have a pre-assignment too. Chapter 5, don't be surprised if it's a little bit confusing at first when you're reading through it. And bring your questions that you have to class on Monday. But chapter 4 homework, expect it to take you a little bit longer for some of the problems. But yes, Niru, use the videos.
Yeah, the first one was difficult, but then
Second.
I hadn't seen the videos yet, so I went back and looked at the material.
It was easier.
Then I saw the videos, and it went pretty quickly after that.
Good. I like to hear that.
Just scroll
So-
down.
I will. I'm going to pause the recording.